Hello, everybody. It is great to be here again today. I'm broadcasting from Washington, D.C. My name is Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 startups and I'm involved in two unicorns. I was on the original management team at Click Software, which was sold to Salesforce for 1.35 billion, and also Eva.ai, an AI HR tech company. And it's with great pleasure that I have a chance for the second time to introduce my friend Hesam. Today, we're going to talk. He's from Khosla Ventures. He's the chief of staff for Vinod Khosla, for I'm sure a lot of you out there recognize the name. Today, we're going to talk about what it actually takes. And this is part two. By the way, this is the first time I've ever done a part two because he's had so many incredible things to say. So with that, hello, Hesam. How are you today?
I'm good, Gary. How are you?
I'm great. So let's talk about it. I mean, we had a great conversation last time, you know, and I want to talk about what it really takes. Let's talk about what types of entrepreneurs really get it done. You have Let's talk about what's the portfolio look at Coastal Ventures today. Let's talk, top 10 companies that people would recognize. Who are they? And then let's go down to what it really takes, the
Yeah,
right stuff.
yeah, no, it's great. Well, thanks again for having me. I didn't realize I was the first part too, so that's great to come back and talk to you.
This could be like Batman the series.
Yeah, yeah. Um, yeah, no, so I figured this would be fun to talk about because a lot of the people in your audience seem to be aspiring entrepreneurs or entrepreneurs and things of that nature. So instead of speaking in platitudes of hire really good people, let's actually talk some tactical advice that we might give some of our portfolio companies. Um, Top 10 companies, that's so hard to say, but I mean, it, a lot of this will boil down to this expression we have internally called the difference between a $0 million company and the difference between a $0 billion company. Both companies, these hypothetical companies, at the point at which they have like 10 to 20 sort of employees and started to build a little bit, um, the difference between a company that's going to end up being a unicorn or not, it's fundamentally different in terms of the quality of the people they have and the questions that are being asked and the willingness to experiment and the culture around that. So we'll unpack a little bit of tactical advice on that. But to answer your question directly about some of the companies, we've been very fortunate in the last couple years to have a lot of really, really wonderful exits. I mean, I think some of our most iconic companies would include things along the lines of Impossible Foods. And in fact, I think in the last 12 months alone, we've had $9 billion generated from just 7 IPOs, with GitLab alone being one that returned the entire fund that we invested in. But there's other companies like I mentioned DoorDash, for instance. We were the first check into that company
Wow.
straight out of Y Combinator. There's Open Door as well, Instacart as well. We were the first check into that because a lot of people think of us potentially as like deep tech or biotech investors, depending on which circles you run into. But we've done pretty well in fintech as well. So I mean, Affirm is another great example of a company there. Okta and Nutanix. At some point we were invested in Square, Affirm, and Stripe all at the same time. And then if you start looking at healthcare, there are examples of Garden Health and Oscar, and things of that nature. And Ginger IO, which just merged with Headspace Health, so that was merged with Headspace and is now called Headspace Health. So
Yeah.
a merger of equals there. So there are some example companies. And to be clear, I was not there when a lot of those initial investments have been made, but being Vinod Khosla's chief of staff, I've heard a lot of the war stories and a lot of that mindset I've had to emulate in the decision-making process that we implement now. So what did all these, I mean, these companies were in disparate fields, and yes, there's a bit of, I'm reluctant to use the word luck, but to pick the right companies consistently, there's certain, telltale signs you look for. And to be clear, especially when you're dealing with a log normal distribution like venture capital, there's always counterexamples. So, take everything I say with a grain of salt, if you will. But the, we talked last time about how important the team is, and that's something that we focus on so much. I want to come back to this notion of a $0 million company versus a $0 billion company. And part of it is being able to recruit really well. And I think sometimes people treat an interview solely as an interview to evaluate people. And that can be counterproductive if, for instance, you're trying to land a really heavy hitting engineer that's going to probably have, a couple other offers. The types of people you want to recruit are going to be the types of people who can go somewhere else and can even go start potentially their own companies, especially early on. I'm talking about the early hires, the first 10 or something like that. So part of interviewing is selling in addition to evaluation, and there's a delicate balance between the two. And part of that includes, how well can you pitch and getting people excited. I know this example that Vinod was working with a portfolio company, and they were like, "Oh wow, we got an opportunity to interview this super heavy hitting person that would, there's a great face to put on a slide deck that'll help de-risk the company and raise lots of money down the road." And the question was then, all right, well, who do you want to interview? Then like, okay, we'll start at the lower level and then work our way up. And Vinod suggested, no, why don't you just have me interview them first, actually, so I can do a little bit of selling to make sure there's alignment on the long-term vision. And I mentioned this thing last time about so that's the high level thing. Is you want to make sure you're selling and evaluating at the same time. But then there's this other notion of, okay, well, how do you even find the people? And I mentioned briefly this notion of gene pool engineering, but tactically, how do you actually go about doing this? And it's a different mindset than, hey, you know what, I need a VP of engineering or I need a COO or something like that. But if you sit down and think critically about your business and do a postmortem analysis and ask yourself, all right, what are the 5 most reasonable reasons why this company could fail? And what are the risks associated with that? So list the top 5 risks. And then what you can do is start thinking about companies or people or expertise out there that have dealt with that risk or know how to think about that risk. Mm-hmm. So now all of a sudden you have 5 risks, and within each risk you could list 5-ish companies, and within those 5-ish companies, identify 3 candidates, whether it's through your network or just looking at LinkedIn's and things of that nature. And now all of a sudden you have 15 names per risk to start, tactically thinking about people you want to hire. And through the process of meeting these people, you will actually start to get a better sense of, what the actual risks are that you're trying to go after. And everything in this process is risk management. That is the hardest thing I think an entrepreneur has to do, right? You have a finite amount of cash, and if you hire someone great, that's awesome. You might have de-risked, the business a little bit. The risk over there on strategy might have gone down, but your cash risk has gone up, right? Because you have to pay them. So, burn's gone up. And
how do you do, so you go in, right? So you say the 15 companies out there, but how do you get the superstar to come in? So you want the top VP of sales to come in. What do you do? Because they've got their families to feed. They need, sometimes they need cash flow coming in. What do you do? How do you balance it out? I mean, there's one thing about giving options and equity. There's another thing about life, right? People may have not have made it, but they're great. Or they need a life-changing event, a divorce or something like that. And then,
exactly. Right? No, and this is something I wouldn't say we struggle. It's something we discuss a lot internally, and it's a great question to ask, but a really, really hard one to answer, precisely. Because you're right. If you want that VP of sales, if they're going to have their choice of companies to go to, and why would I come join a team of 3 people that might not even have a semblance of product market fit? They might not even have a product yet, right? Well, there's nothing to sell, I guess at that point. It might be too early, but there is this inflection point, probably, and these numbers have huge error bars on like 10 to 25-ish sort of employees, where all of a sudden the technology could be working and things seem to be either selling or there's some semblance of we're going to market, we're getting feedback, we're iterating, and we're learning quickly. And that is usually the point at which you can bring some of these heaviest hitter sorts of people on board. I mean, ideally, if you want to bring them in early on, the example I can think of is Curai. They created an enormous option pool when they founded the company. This was Neil Khosla, and he brought on 2 people at the founder level, effectively. The person who invented who developed the machine learning and AI algorithm on Netflix to, recommend shows to you. So if you're up late at night, this was this guy's fault, effectively. But how he incentivized them was, the selling process I was describing to you, and then also giving them the equity. But to your point, yes, it is difficult to balance that inflection point of, I want to bring in some initial people who will be athletes and ready to hit the ground running and willing to pivot and learn and ask the right sorts of questions. And then how do I transition that to getting these other heavier hitter people there? I think part of that is the clarity of thought and the selling that you're doing there. And it is a little bit of salesmanship, right? You have to convince someone to be excited about this transformative idea. And that's why we like working with people who focus on impact first, and profits tend to follow impacts, is that it's not that it's easier to get people excited about impact, but it's something that people are much more willing to hang their hat on, right? And hopefully at that point, you might have enough, hopefully at that point you have enough cash to, make sure that, people have families and kids, like you were describing, right, and things of that nature. So,
Insurance, I mean, whenever I've started a company, we don't start out with health insurance. It comes later, right? When
yep.
you start to put the assemblage. It's like jelly. It all starts to, come together. A jello comes together and starts to mold and become real.
Mhm. Yeah, yeah.
So balancing that out, you're right. There's a balancing between, the risks on one side, the business risks, and then not having the right person on board that can get the job done.
Yeah,
At the
yeah.
same time, when you look at a team, like what does VNOD look like? What do you look at in terms of the team? You could say this is an all-star team that's going to
Mhm.
win. What does that CEO look like? What do the founders look like, and how many founders?
Yeah, yeah. I don't think we have. I've actually gotten this question a couple times recently in other talks or interviews about, oh, solo founder versus multiple founders. I think we're pretty. I've never heard us come up with a rule internally of like this is good or this is bad. Let me put it that way. I know some people are not the biggest fans of solo founders, but I haven't seen that in our culture. Let me put it that way. And I'm speaking for myself, to be clear. Maybe others on our team have different opinions. But to answer this question directly, I think it has to do with this. I don't want to belabor something that I said in the last time around, but this notion of having this grand vision of a future you want to invent and being flexible on the tactics to get there. And I think the ones that resonate the best with us and is the willingness to one take feedback and be willing to debate the nuances of certain things and to not, I'm trying to think of a better way to put this. Um, the types of people who are going to be flexible because necessarily in the early stages things will go wrong, right? And Patrick Collison has this amazing interview he did with us at one of our CEO summits. This is the founder of Stripe, by the way, where he talks about, look, the first 10 hires replicate themselves 10 times effectively. So culture becomes really important there. I think having almost like a scientific, like first principles thinking mindset is really important. And I think also this is a Hesam notion, by the way, because those first 10 people replicate themselves 10 times. That's why it's also really important to have a diverse team at the beginning. And I don't mean diverse in terms of backgrounds. I also mean culturally diverse as well, right? If you want to have a gender balanced team, well, make sure your first 10 hires are 5 women and 5 men, right? Because that tends to be a not self-fulfilling prophecy, but it amplifies itself from the early stages very quickly. And the other thing I think it takes is just time to get to know the team over the course of time, whether that's through, hey, we'll meet over coffee or dinner and things of that nature, just to get a sense of, do we want to even work with each other? I mean, hiring is a matching exercise, as is picking the right partner to build a company with, right? You don't want to look at your calendar and be like, oh no, I have to talk to company X this week. I forgot we have our monthly update. You want to be excited to talk to these people, right? And
Exactly.
I think part of that is the alignment on the mission and the impact. And at least that's what excites me every day when I wake up, where I'm like, okay, aside from getting to learn a lot of cool stuff, I get to talk to really exciting people like Gary Fowler who are passionate about building things, right? So
Yeah, no, absolutely. And that's part of the other thing is like having the passion to do it. A lot of times when we meet with startups from all over the world, they say, "Oh, maybe I can do it. I'm going to try." And it's like, I try to tell them it's not about trying, it's about doing. It's about execution, because it's about getting shit done. It's about where do we go? How do we do it? And let's get it done. Let's move forward. And it ain't easy. You're right. It's like this. It's a roller coaster, isn't it? When you're up and down and in and out. But keeping that positive attitude is important. So let's go down through and let's look about. I want to talk about the current financing environment today. What's going on today? And then I want to talk about SPACs a little bit to see where you are in terms of SPACs. But what's happening today in the current financing environment?
Yeah, I'm glad you asked that, and I think it'd be important just for anyone on the call, whether they're an aspiring investor or entrepreneur, I just want to get a sense of, what's going on in the markets. Like I don't think that any secret that interest rates have been at all-time lows for since the financial crisis, right? So what happens if your return on debt is low? Well, people need to get returns, so they start getting riskier and riskier. They move into equities and things of that nature. And lots of institutional investors like endowments have allocated money to private markets along the lines of venture capital or private equity or hedge funds or things of that nature that not everyone may or may not have access to. So the system is awash with lots of money. Let's put it there. That's observation number one. I think that's pretty obvious. And some people might use words like bubbles or the market is at an well, I mean, this is objectively true. The market's close to an all-time high on an absolute valuation, but relative valuation also. If you look at things like the cyclically adjusted PE ratio, which I haven't checked recently. This is something from Robert Schiller at Yale. Yeah, valuations are high, and there's a lot of money, which could be contributing to that, obviously. I know enough to know that I don't know, where the market's going to be in a couple months from now, which is why we tend to focus on the long-term sort of implications there. But in the early stage environment, I would say that it's become much more competitive from our point of view, which is actually net positive for the entrepreneur point of view. There are certain times when it's better to be buying or selling equity. Right now, I think it's a better time to be selling equity, in my opinion. And things along the lines of, I mean, everyone has heard, or hopefully has heard of, Tiger Global, for instance, right? They're the ones who are playing the money velocity game of, I want to go spend the $1 billion and outsource it as much diligence as possible. And I want to be a lower cost of capital source for entrepreneurs. And I get this question often of, hey, with these hedge funds and the private money coming down market from like the growthy stage down to like the early stage, what do you think of that? I think it's great for the system in general. In the sense that now venture capitalists who want to be involved in the cooking and do their diligence over their own timeline have to answer the question, well, why should I go with, what is the value add that you bring to the table when I have this other lower cost of capital access, right? Yeah. So I think net, it's actually good for the system. Will that turn into also lots of companies getting funded today that would not have been funded 5 years ago or 10 years ago? Yes. I think that is, I would feel comfortable and confident hanging my hat on that. And we always say that in environments like this, there will be many more losers than winners by number of companies, but significantly more money will be made than lost. And that's part of the job that we have to have as fiduciaries to try to identify these sorts of companies. But I think companies are going public earlier, and you're seeing also. Did you see the news about Sequoia? I think it was like 2-3 weeks ago, by the way, how they changed their fund structure.
No. What happened?
Yeah, so this is another general trend I've seen, because this notion of like seed versus series, well, I guess seed's kind of a different, but like Series A, Series B, Series C, like this naming nomenclature is starting to become a little bit, in my opinion, obsolete. Mm-hmm. You should just view everything as a financing event where you have capital to de-risk certain things. And with Sequoia, Roloff published this paper in Medium a couple of weeks ago, and I don't know a lot of the nuances of it, but the idea is basically Sequoia they'll have the Sequoia fund, which is an evergreen fund. So no longer do they have a time horizon. It exists in perpetuity. And then this overarching fund will then invest into their early stage fund or their later stage growth fund, or even public markets as well. And part of it is, look, they did an analysis that showed if they held on to companies that IPO'd for like another year or something like that, they would have made billions of more dollars, right? And so much value creation happens after companies go public, and so much value creation happens if you're an early stage investor, which is where we tended to focus historically. So much value creation happens in the growth stage and even going public stage, which is why we have a growth fund now, which is public, as well as some SPACs that we had as well. So I don't know what you're seeing on your side, but Gary, but from my point of view, it seems like these capital markets are starting to blur together in a way that I think is, it's a secular trend that's been happening over the course of time, but the markets are becoming informationally a little bit more efficient as well, hence contributing to it being more competitive, right? I mean, if you were a public investor in the 1990s, before the broad dissemination of the internet, if Goldman Sachs was going to be upgrading, General Electric, and you just happened to be in New York and you would get the snail mail faster than someone who's on the West Coast running a hedge fund, you could trade on that. That was alpha. That was actual alpha that could be generated. Mm-hmm. Then the broad dissemination of the internet happened, and all of a sudden, that signal, was arbitraged out effectively over time. And private equity markets nowadays, if you're writing a couple $100 million checks, these are deals that are being run by banks, and everyone has access to the same, pitch books over the course of time, mm-hmm. deal books, if you will. So it's become more informationally efficient there. And I think these companies like Tiger or these other private equity companies that have come down market are contributing to that informational efficiency, or at least just a little bit more of an efficient market. I haven't seen data to objectively assess this. This is my intuition. I would invite anyone to push back on this if they want to email me separately, but I think it's interesting, which is a natural segue into SPACs, which I think you wanted to talk about, right?
Yeah, no, absolutely. I mean, we're seeing it too. I mean, what I'm seeing from my perspective, I see these because a lot of it's happened because of the digital transformation over the last couple of years. We're seeing opportunities in places other people don't go, right? They're not in the places in Africa where we are, right? We just
Mm-hmm.
don't see them, and part of it is because they, it's what did I told you? Scott McNeely said, "Go to areas that you fear the most."
Yeah, yep.
And so that's part of it. And you got to go to those places and you got to develop relationships with people and they have to feel comfortable with you. You're not just there for a minute. You're there to help them. You're there to be part of the team. You're totally integrated in wherever that is. And at the same time, we got to realize that, I spoke at the United Nations a few weeks ago. As technology is a tool for peace, we got a lot of problems we got to solve right together. It's not just about making money. It's about how we can solve these issues with global warming, how we can go down to, we got population increase from 8 billion to 13 billion. We got to make a lot more food, right? A lot more food. We can't increase the number of livestock because the 26% of the pollution today is created by livestock. We got to have plant-based protein. We got to, from the farm to the table, we've got to do things differently. And at the same time, I wrote an article yesterday in Forbes on the metaverse. I wrote it before Meta and before Facebook was talking about it. I wrote this article, but it's really true. We are changing. Our lives are fundamentally changing, and in order to get on board with it, whether it's health tech and today I was with a company that does cardiac monitoring remotely and can tell a problem, analyze a problem using AI 2 months before it's an issue where you have so what's happened is I see all this data that's out there and I see these companies being able to solve these problems in an entirely different kind of way. And at the same time, the AI models many times are the same models across multiple verticals. It's the same model. It's the same thing. And so here it's using the supply chain. Here it's using it as a Google-like search for your personal cloud. So, but, I don't know what your feeling is, but for me, I was at the UN and I was speaking, and here are some of the brightest people in the world. And why they asked me, Hesam, is beyond me. I'm a country boy. But they came to me and I said, I don't get this. Why in the world we're talking about the AR and VR as a tool to combat violent extremism and terrorism? Oh, that's cool. But why don't we talk about peace? Why don't we talk about how to create jobs and opportunities for each of us to be able to succeed and move forward in our lives so we can feed our families and take care of our children and learn more and be, democratize these opportunities? Don't you think that would help? And so, anyhow, they came to me. Sorry to go off on a tangent but I think it's really
No,
important.
this is really important. Actually, this is something we've discussed. That I'll caveat with: I'm not a politician by an extent of the imagination, even though I love reading the Federalist Papers and try to keep up with the news. This is a conversation we have a lot internally in terms of the impact of AI, because actually it's something that's come up, and I don't know what your opinion on this is that AI has actually surfaced lots of issues with bias in the
Exactly.
when it comes to things like recruiting, right?
Exactly.
Because if you're a top-notch recruiter for an investment bank, you're probably going to like Harvard, Princeton, Yale, and things of that nature, and it becomes a little bit of a self-fulfilling prophecy when you do things like that. It would be impossible to interview every college student in the country, but if you write an unbiased, in theory, algorithm that's AI based, then that could actually help create more equal opportunities, as you're describing, where talent is distributed equally, but perhaps opportunities are not. My general take is actually, I think it's a good thing that AI is showing where the bias is, because most of the bias, in my opinion, comes from the underlying data sets that are being fed into it, right? The AI is just doing what
Exactly.
you told it to do, right? So,
Exactly.
so the AI is then, or any sort of computer approach then, in general, would help identify where the data sets are biased, and then you can ask the question, okay, well, why are they biased? Probably because of the human error or just human bias that's bleeding into that, and how do we fix that, right? And these are difficult questions. I know that there was an article a couple of years ago about, I think it might have been Amazon was initially trying to use AI for screening resumes, and it ended up being a very racially biased algorithm initially. And these are the types of like important questions I think if you're developing these sorts of tools you need to ask. And I haven't heard the angle you were presenting of let's talk about peace versus, how do we suppress war or things of that nature. But it's a type of thing that I find exciting. The other one you brought up, an AI-based tool for healthcare. That's something we spent a lot of time actually talking about and thinking about internally. And I have lots of thoughts on that. So we can double click on that, or we can
Oh
talk
yeah,
about
well, we're finding
next.
those companies is those companies are coming to us. The one thing, build the field and they will come. The one thing that we've been able to do on our side, and this isn't an advertisement for GSD, but I just, they're coming in because they hear about us, they see us, and these companies have incredible, they're kind of like having a Ferrari in the garage. It's one thing that it's like my sports car. I have a sports car, not a Ferrari, but I have it in the garage, and nobody knows about it because I keep it in the garage. I do bring it out once in a while, but if you want to do it, you got to take it on the track. You got to run it on the track. Can you win the race or not? And if you can't win it, what do you need to do? Put a turbocharger, supercharger, get a new driver, put new tires, tune it up. Aerodynamics need to be changed a bit, but you need to do it. And sometimes we forget, and they stay in these regions around the world. This is what we're seeing, and they don't get a chance to really showcase what they have. And they're incredible technology because, being in Silicon Valley myself and spent over 30 years there, you just, you get kind of this kind of a really, pigeonholed mentality, and it's got to be wider. And I think that's where the world comes together and talk about technology as a tool for peace. My point was at the UN was that we all have a chance to contribute, just like you said, and you said it so eloquently. It's about this cultural diversity. We need to bring that in, and we need to figure out how to not have those biases by bringing people, it doesn't matter where they're from. It doesn't matter who they are. It matters if they can contribute and they have a different view. That's where we make the teams. And, I'm really, I see it more and more every day. I'm kind of sick of the political stuff that's going on around the world. I think a lot of it could be solved if we start to work together. And instead of like, I used to be a psychologist, or I remember in clinical psychology, humanistic, it's about let's look at the similarities of how we can relate and not the differences. Let's have a starting point that's a little bit different. It's not about race. It's not about religion. It's about how we can work together. What things, where are the starting points of working together? Then we can change it. And I think so. When we see these teams today, I think intergenerational, multicultural, decentralized teams are really important. And we just don't focus on it. It's like we focus on the 20-year-olds, and what happened to the people that are 50 years old with gray hair?
No, I've noticed a little bit of the ageism myself. Actually, this is something I struggle with as well, just because I personally want to start a company once I leave Khosla Ventures. And I'm like, oh well, I'll be in like my mid 30s. Is that too old to start a company? And that's actually not born out of the data. That is actually the ideal age, like in your 30s to 40s, to start a company. There's an awesome data set that I can send you afterwards. There's this article on like at what age do people start unicorns, and it's actually it's much more broadly distributed. And I think a lot of this is just the amplification of, it's really cool to talk about people like Mark Zuckerberg, at age whatever, less than 20, founding things like Facebook.
Because it's a story, and it's like
it's a good story. Yeah.
But we don't think about the other parts of it, right? Sometimes they come to well-to-do parents, right? It's not like they just came off a farm and started. They come from parents that have some money. They drop out of university, but it's Harvard. You know what I mean? It's it's, and at the same time, no, it's, I hear you. It's interesting, but how do we change that? Because it's got to have here today, right? We're in this digital world. How do you get the credibility if you're a 22-year-old that's developed something to be able to take it global and to find somebody like yourself? It's hard.
Yeah. Well, let me kind of implicitly answer that, but address something you brought up about cultural diversity. Because if there are any fiscally conservative people potentially on this call right now, they might have cringed a little bit at the idea of diversity for diversity's sake. So suppose you don't think, if you're a fan of the Milton Friedman-esque field of thought of the social responsibility of a company is to maximize profits, then you would still end up concluding the same thing, in my opinion, because having diversity of thought, especially at an early stage, and having that throughout the company is a way to make sure that you don't get disrupted. I mean, the best way to get to disrupt is to disrupt yourself in theory, right? So that you build the longevity of a company. So I would argue that this is a Hesam opinion, to be clear, not a Khosla Ventures opinion, or at least I haven't seen us take a public opinion on this, is that it is important to have that diversity, even from a profit maximization point of view, because it is important to have people who disagree with each other and people who have diverse backgrounds and have seen different sides of the world.
Because that's how you
Yeah,
win, right? Instead of
that's how you win long term. Yeah.
You know what? Here's the thing. I don't know about you. You see this, but it's like we used to say, drinking the Kool-Aid. You get to a point where some of the startups, because they don't have diversity, because they don't do customer development, they start to believe that they have is right so much that they don't get the feedback and they don't have the cultural diversity to be able to make it real. It's like it becomes all. I don't want to go down the road too much, but it's like we do things. We got to have. I believe intergenerational teams. Here's what I think. From my standpoint, I know a lot of people that are over 40 years old that have a lot of experience that are world renowned, right? Former CEOs of top retail companies, people that have built companies in Silicon Valley, et cetera, that have a lot of money, but they want to still be engaged in companies. They are really interested. And not just as an investor, they want to be engaged. I just had one, he's worth about $500 million. If he may be listening today. Hello, I'm mentioning you. And but anyhow, when I had a conversation, he wants to be involved. He built a company, sold for 400 million, another one he just sold for $80 million. Right? He put the money in his pocket. And so why not get people like that and have those contacts, in areas like manufacturing, areas like software development, areas like supply chain, and bring them in, get them part of the team. And in just my opinion, I think it works. And then the other thing is more female entrepreneurs. I don't know why. And Black, I was with some of my friends from the head of the Urban League last night for dinner and NAACP. And it's like, why don't we, I get it. Like we have this incredible resource in front of us that we could bring together. Why don't we do that? And, so it needs to happen. It's going to happen. And then we've got Africa rising, 1.3 billion people, right? Incredible opportunities. Some of the brightest minds in the world that are untapped. So, but how do we, Hesam, how do we do that? It's like, how do we change we're doing it on our side, right? Because we're going out, we're taking our money where our mouth is to be able to help.
Yeah, I'm definitely not qualified to answer this question on a professional level, but on a personal level, I think a lot of it boils down to decreasing the inequality. That's nothing new. I think everyone on this call would agree with that. And I think part of that is having people who want to invest in and build these sorts of companies. So let me give you at least an actual tangible example. This is something that we are considering and looking into deeply right now, is fractional ownership of real estate or private assets, which sounds like a very Silicon Valley sort of thing, like a tech-enabled sort of thing, but it's driven by this fundamental hypothesis that wealth inequality, especially like in the United States, or actually I guess across the world, a big contributing factor of that is that the bottom quartile especially, but the bottom half of people in developed don't have access to or exposure to equities, broadly speaking, whether they don't own stocks, but they also don't qualify to invest in venture capital or private equity, or it's difficult for them to buy real estate because they might, and things of that. So this is, well, how can you fix that? If you have a tech-enabled solution, and we've looked at some pretty interesting companies recently that, for instance, on the back end might have blockchain technology that, I'll take a prop of land, or actually there was a home that was IPO'd in Brooklyn, I think like 2 weeks ago for the first time, that's publicly traded. You can go on Robinhood, you can go on Charles Schwab, whatever broker you have, and you can actually go buy and sell shares.
I love that. That's a great idea.
The devil's in the details in these types of businesses when it comes to the legal structure and things of that. And customer acquisition costs, I think, broadly speaking, are a concern. But the idea of our thesis, or at least the thesis I'm pursuing, is, hey, you know what? Having people get access to these sorts of investments is important in dampening this inequality. I don't have much of an international perspective, so I can't speak to the Africa notion specifically, except saying, yes, I agree with the high level thought of we should be distributing opportunities more equally. But if you look at I think there was a New York Times study that showed that, since the tax cuts in the Reagan administration, wealth inequality has toppled, and it's because the people at the top are able to invest into these assets that I was describing to you, and it compounds. It's exponential, right? So generational wealth then ends up compounding more, and then people at the bottom and they're compounding at lower rates. So I think it's a really interesting space in which I've seen a lot of people poking around the idea of this. So if anyone on the call is thinking of building either fractional ownership or just tools to broadly disseminate this sort of market exposure to people, please feel free to reach out to me, hm@khoslaventures.com. I would love to talk about it, and especially if you disagree with anything I'm saying, because I think this is an important topic that should be fleshed out.
Yeah, Hesam, we just had comments from Africa. So from Johannesburg, first of all, we just got a note from Stewart. So we're being listened to all over the world, and Kudzu. So just so you know, when I talk about the distribution of opportunity, people are listening to what we're saying today. It's incredible. I need to have you back for another part 3. It's fascinating having these conversations with you.
I think we went over time again.
Yeah, it's okay. The good news is it's my show.
Yeah.
So listen, I want to wrap up, and I do want to have you back for a part 3 because this is a fascinating conversation, and our audience all over the world really appreciate it. I get notes from just all over, from small villages in India to Vietnam. People really relish it, and they want the opportunity to be able to partake, and they want to have the hope, and they need people just like yourself that are connected in VNOD that are interested in their technologies and opportunities. So listen, final comments and how do people reach you? And let's do, my chief of staff will reach out if you're up to it, for doing a part 3.
Yeah, definitely. I'd definitely be down. Any closing comments? Look, I just would caveat it again that, this is stuff that I find personally fascinating and important. It's the type of things that motivate me. But I'm not a political expert by any extent of the imagination, nor an economist. Just because I read it a lot doesn't mean I know enough to say this with conviction. But it is something that I think is important, that I've noticed generationally that millennials like myself tend to care about these sorts of things. So it's an interesting time to be involved in technology, especially if you have an impact-focused sort of mindset.
No, it's great. It's great to have you. And how do people get a hold of you? What's the best way? Are you LinkedIn, Twitter, email?
I don't use Twitter much. I actually only got a Twitter when I joined Khosla Ventures because I realized everyone in Silicon Valley has one. Maybe I'm aging myself by saying that. No, feel free to reach out to me on LinkedIn. And I mentioned my email address, hm@khoslaventures.com. I would love to engage in any conversations about this topic. I respond to every email I get, but I get lots of emails. So if it takes me a couple of days, I apologize. But I do respond to every email I get. And actually, Vinod Khosla does the same thing. Every email he gets, I get a response, actually. And people don't realize that. And he gets 100,000 emails a year. So I think that's a really important thing to do if you're, I personally enjoyed it. And I think it's actually fun and fulfilling to talk about this with other people.
No, I really appreciate you taking the time out of a busy schedule to join my show today. To my audience out there, thank you for joining. Stay tuned for another edition of GSD Presents Silicon Valley AI and Tech. I will be back again on Thursday. Stay happy, stay safe, and stay healthy. My name's Gary Fowler, and I'm your host. Thank you very much for attending today. Hesam, thank you, and I look for part 3, and let's continue the dialogue. Take care, everybody. Have a nice day. Stay happy.
Thanks for having me. Thanks for listening, everyone.
Bye-bye.
Bye-bye.